Welcome to TheoTrade. This is Don Kaufman, May 10th, 2023. Just after the cash close here on this Wednesday afternoon, CPI was out this morning. The markets ripped, they dipped, they ripped again. We're just all over the place. But the big question here, if you start looking down the list, some of the usual suspects, some of the sectors, you're going to ask the same question too. Are markets completely reliant on tech? We're actually going to look at that and much more here on this evening's update. So the S&Ps, as I said, it's just all over the place. But, in the end, we ended up in, well, the exact same range that we've been in now for, this is the 6th week. Again, CPI number comes in just a hair under 4.9%. The market loves it. Yeah, right up until the point there was actually some heavy sell side activity. Can you believe we almost touched down to the 41.06? I mean, right here at this 41.12. I mean, that was it. That was going to be the last gasp, and all of a sudden we turned, we burned back to the upside. And again, SPOOs finished the day higher. But looking down the list of what I term the usual suspects, one of the first things that I want to bring up is I really cannot recall another time in a 25-year career where literally you have to watch, so few symbols. Like, what really matters right now? What is really moving markets? Well, what do you have in terms of sectors? So you got the financials. All right, so here we go. There's the XLF. Down below over here, you have the XLE and everything. And by the way, XLE, of course, is energy. XLF, of course, the financials. And all the meat in between is your NVIDIA, your Tesla, your Meta, your Google, Amazon. Forget even Netflix. Pull that one out of there. Apple and Microsoft. And I literally will ask you what else is really going to move markets? What else has the ability to move markets? And of course, you're going to turn around and go, well, you could start looking at what? You want me to look at individual banks? I think the financials and the XLF will do the job over there. I think in the energy sector, there's not necessarily a reason to look per se specifically at ExxonMobil, and its heavy market cap, because the XLE basically is owned by none other than ExxonMobil. I mean, you only have to look at a handful of things. That and maybe some bond markets and people. That's it. That's your market. And what's interesting in today's trading session, is it's another session that delivers to us, well, how markets really are completely and utterly reliant upon tech. Right, I guess the proof's in the trade action here. Take a look at the XLF. The XLF ended down just about 0.5%. And I want to reiterate, the financials, again, are actually down 6.5% on a year-to-date basis. And I'm highlighting that not to be, bearish. I'm just pointing out that, all right, so the financials are down. It's critical sector in here. Then you look, of course, at the energy sector. It's down by the tune of about 6%. Year to date, today down about 1%. So how on earth can the S&Ps be bid? Well, welcome to the world according to tech. And by the way, when you start pointing out other sectors, whether it's XLP or, again, we can pull up some of the consumer stocks, either discretionaries and or staples. Look at Walmart today, pretty good size range, but Walmart finished down about 0.3%. I mean, look, there's just nothing anymore that matters other than, you start looking at stuff like Apple. And again, I'll prove a little point about Apple. Apple is up almost 40% a year-to-date basis. And if we were to take a look at Apple's market cap, it's worth about, again, $2.7 trillion. You had to pause before even saying that. It's up about $2.7 trillion, about a 40% increase. Can you imagine? A $700 billion add to market cap this year. Just to give you an idea, how big is $700 billion? I believe that's NVIDIA. NVIDIA, there you go. NVIDIA is about a $700 billion company. So Apple this year has gained as much market cap as NVIDIA is actually worth. And you start to question, are markets completely reliant on tech? Of course they are. Unequivocally, markets belong to tech. And today is, again, a prime example. I mean, we have a day where, the advanced decline line in the S&P 100, was a pure 50-50. But, hey, lo and behold, for the most part, what really matters in markets right now is you have Microsoft bid by the tune of about 1.7%. Strong bid, over $5 move to the upside. Apple up over 1%. Okay. Amazon flying over 3%. This is one that actually hasn't been a critical mover. Google, 4% move to the upside. That's it. Okay. I mean, do we want to add in NVIDIA? Sure, add it in. It doesn't even make a difference at this point that the S&Ps, okay, simply will not have a downtick as long as we're seeing degrees of strength inside of broader tech, which actually brings me back over to Apple, because Apple at this point is only a stone's throw off an all-time high. Let's bring up a 3-year chart. You can see the all-time high right up here is trading 182.94. Let's call it 183. At this point in time, I think we have to anticipate that Apple, I mean, if it's going to go out in style, I think it has to actually blow off to the upside. That there's enough traders out there that are going to get bullish in Apple. They're going to buy calls. They're actually going to force it into a gamma squeeze, which is also true because the fact that Apple, there's a decent size short position on there. Now, whenever I mention that there's a decent size short position in a particular underlying, the data on that is incredibly antiquated. It's old by the time I even say that's ancient history. What I'm more interested in on something like Apple, okay, would be the sheer magnitude, if you will, of calls that are going to be traded. And we'll look at this in the days to come during market hours. Traded at the ask or above would be indicative of a bit of a gamma squeeze, which ultimately can result, again, for those of you that are not familiar with the term gamma squeeze, all right, traders go out and they buy calls. Who sells them the calls? Market makers. As the market makers sell calls, okay, to retail traders, the market maker then turns around and buys stock. And what ultimately you're doing, you being the retail trader, you're buying calls, and you're actually forcing the market to the upside, because your buying of calls forces the market maker to actually sell you the calls. In turn, they actually buy what? No, they buy actual shares of Apple to hedge off, okay, the short calls position, and away we go. I think at this point, because we're a stone's throw off the all-time high, we could actually see Apple spurt into new highs. So a market, okay, for right now, the market that belongs to tech, unless there's some exogenous catalyst, just this huge catalyst that sets markets off in a tirade to the downside, I think you have to expect that tech has a pretty good grip on things, and Apple specifically cracking into the 185 kind of range is probably a foregone conclusion. Again, with everything pushed aside, meaning that if a catalyst comes out and news breaks, and obviously markets spin around, but there's no question that this range right now, we're locked into it until tech can actually resolve a little bit higher. With that being said, talking about the market as a whole and the range as a whole, look where we are right now. To say that we're doing absolutely nothing is an absolute, okay, understatement. One interesting aspect about absolutely nothing is absolutely nothing today was met with, we actually hit the SPX expected move, the upper edge, on a daily basis. Okay, but one thing that really resonated with me, and I was pretty shocked when I look at this. So here we are, it's Wednesday. There is almost a $69 expected move for the entire week, but look where the market's actually finished. Here we are, massively unchanged during a Wednesday afternoon. So again, there's not a lot of data coming out. I mean, jobless claims tomorrow. All right, some more inventory reports coming on Friday, but nothing huge. Nevertheless, I think you have to expect, I mean, look, we've gotten nowhere this week. Today, we threatened to sell off. As I said, we dipped, we ripped, okay, we laughed, we cried. We ended up massively unchanged. I mean, yeah, the S&Ps are up 19, but they're just recovering what they had lost. Look, you've got markets here that are poised to crack above, 4,200. Or a good crack under 4,100. Again, almost a 70-point move. Expected move is about $69, and we're at the 0 point right now, which does give you an appetite for risk as the week progresses. No question about it. The other thing is we've got a pretty substantial bifurcation. What I would look for, okay, to get a good feel coming into like tomorrow, our market's going to correlate. Are we actually going to see like the XLE and the XLF move, okay, in relative tandem with tech? That would be, if you will, okay, the breakout feature of this marketplace. And again, I want to reiterate this in context so that everybody kind of understands when I talk about, markets being completely reliant on tech. Yes, they are completely reliant on tech. At this point, though, tech is just holding the market, okay, locked in a range, while again, you have what? The XLE headed down, you've got the XLF headed down, okay? You've got the QQQ or big tech actually headed up, and here we are in this lovely range. When, okay, we were ready to break the range, you're going to see correlation. That means in that S&P 100 or S&P 500, you see like 90 stocks trading to the upside, or the opposite, 90 stocks trading to the downside. That would be, again, much more indicative of, again, being able to smoke the range to the upside or to the downside. And I want to, once again, all right, reiterate my point, okay, from some of the previous, discussions we've had on these evening videos, that I don't think it's fair to have a lot of skin in the game for whether we're going to break to the upside or whether we're going to break to the downside. People, look, yes, tech owns us right now. Yes, Apple is incredibly strong. Yeah, Apple going to 185, okay, looks like it's going to happen. Meanwhile, news comes out and you might feel very differently. I mean, anything can happen now, and overnight, I still think we're a coin flip away from exploding to the upside or the downside. However, okay, with that, I also want to once again deliver to you, if we explode to the upside, it'll be fierce, okay, but we might have to actually rip to the upside to ultimately resolve lower in the overall marketplace. Come on, there's a ton of shorts out there. Squeeze, okay, is very well could be on right now. Again, coming down to all the way to 40, okay, 41.12, and then ripping and turning back around, ending the day slightly higher. Again, strength in the market is only about strength in a handful of tech stocks. Everything else, okay, right now doesn't look great. It's the world according to tech. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.